Hey everybody, welcome back to the channel. We are back on another episode of Daily Palantir. This episode is going to be my Palantir Q3 2024 earnings recap. Now, we had earnings on Monday. It's been a very busy week. I haven't had the chance to actually sit down for 20 minutes, record, and give my thoughts, do a deep dive on the numbers. We have talked about it in various live streams, Palantir Weekly, but now today I'm ready to deep dive and actually get into all of the numbers. The stock was on Monday, $40. The stock, today's Sunday, closed on Friday at around $58.86. It has been quite a week, to say the least. I mean, 40 to 58. So, pretty much every dollar we go up is a momentous occasion on the market open streams, and we're covering it, and we went up $18. So it has been quite a week. Time to get into the numbers. In the words of Alex Karp, they eviscerated this quarter, and now it's time to find out why they eviscerated this quarter. All right, so before we get into the numbers, the first thing I want to do is take a look at the stock. So this is what we're looking at right here, $58.39 on Friday. It closed, and then after hours closed at $58.86, up about 5% on Friday alone, and up 40% for the week, which is, I mean, I don't think anyone expected it. I really don't. On the last Palantir Weekly, we were talking about Palantir stock when it was at, I think, $40 right before we had earnings. And, all of us thought, all right, at $40, it's obviously getting up there in terms of being expensive. But we do think that if they reaccelerate growth, then that could be a tailwind for the company. I don't think any of us thought that it would go up 42%. That is almost 50%. I believe Palantir is at a $35 billion in market cap. The market cap now is $130 billion for Palantir, and we'll talk about that and go deeper into that in a bit. But it's just been an incredible week. And this is my take on this, quite frankly, is that this is what it means. This is what it means to be a tech investor in a generational company. Over the past month, up 34%, past 6 months, up 180%, year to date, 252%. It is outperforming NVIDIA this year. And over the past 5 days, up 42%. This is what it means to be a tech investor. What it means to be a tech investor is to buy technology stocks that you believe are going to grow into valuations and are going to have explosive and exponential hypergrowth. I mean, at the end of the day, you could buy a company giving a 6% dividend, growing at 4 to 5% a year, or you could buy a company that is re-accelerating growth like Palantir, the biggest knock on Palantir over the past 2 years. And I've been dealing with all these knocks as someone who's been covering the company for the better part of 4 years, is that they don't grow and they can't grow, and that their ability to get into a growth stage is not possible. I mean, this was the biggest concern. Well, they proved everyone wrong on these earnings, and we're going to talk about how they proved everyone wrong, but they are now accelerating at 30% top line growth. And what it means to be a tech investor is sometimes with Tesla, Amazon, NVIDIA, like, these are generational companies. Usually generational companies happen to be technology companies, and a lot of the time the valuations are hard to make sense of. A lot of times people are buying these stocks not just because of the PE and the price of sales, but they're buying it for something greater. If you take a look at Tesla, added $100 billion in a day on Friday. Now the stock's at 325, back to being a $1 trillion company. There are reasons people invest in technology companies outside of just the numbers themselves, but the numbers and the growth have to be the foundation to get people to care about these exponentially interesting, unique tech companies that exist. And the only way to get people to actually allocate capital is to give them a sign that you think they're going to grow. And then if they actually do grow, you get a lot of people more interested. And I think that's what we're seeing this week with Palantir. I think we are seeing a lot of people believe that this growth story is not done. This growth story is just beginning. And as a result, look, if you're along, it's kind of just enjoy the ride. Again, we'll talk about valuation, my thoughts on it in a bit. But if you are along, if you've been around watching the channel, which so many of you have since 2021, and you were dealing with the pain of buying it at $6, $7, $8, for which now feels like it's the happiest thing in the world if I could buy it at $6, $7, $8. But that's just how things work, right? But dealing through those years, I think you sit back and you just say it's been a fun ride, and you let the world kind of decide how to value Palantir, and you sit with your position and just enjoy seeing the world try to figure this out while you were figuring it out before the world even thought of trying to figure out back in 2022. So incredible week. Congrats to shareholders. Let's get into these numbers. All right, so I want to first start off with some high-level thoughts on the numbers. Palantir is now a growing company. And we got resemblance of their growth over the past couple of quarters as they started to kind of beat on the estimates in a little bit of a larger way. I mean, last quarter they guided for 22.5%. They came in at 27%, so they beat by about 5%. And everyone was like, oh, so these guys are sandbagging a little bit. By the way, the analysts did not raise expectations going into this quarter or last quarter because the analysts, again, a majority of them do not feel that Palantir is able to grow. And so, you've got your Marianas, your Dan Ives. By the way, Dan Ives upgraded us to 57. Mariana upgraded us to 55. I will be doing separate videos this week discussing those price targets and the logic and the reports that they put out. But in general, most analysts do not feel that Palantir can grow. And as a result, it's actually really bullish for investors because then they lower the estimates so much that if Palantir even goes slightly above, which in this case, Palantir went a lot more above at 726 million, well, the analysts look wrong and the streets gets excited because the streets like, oh my God, like they're reaccelerating growth. This is exciting. And like, now they have momentum. So I think what's really important here is to understand that the reason Q3 earnings crushed is because the analysts didn't expect them to crush and Palantir proved the analysts wrong. So let's get into the numbers one by one. These are the high level kind of metrics that you're seeing right here. Obviously, 30% year-over-year growth is incredible. Commercial revenue, U.S. revenue, 44%. So we'll get into all the different numbers and give my thoughts on it. But the core thesis is that they are growing. And because they are growing, that is why I think the street is continuing to give Palantir some more momentum. They did get into the S&P 500 this quarter as well on September 6th. The stock, by the way, was $29.50 on September 6th. Today it is $58. So S&P 500 inclusion has been incredibly important from an institutional perspective coming into Palantir. By the way, institutional ownership is now 49%. Shout out to Brett, who posted that on Twitter the other day. It went from 44 to 49. And that's from the Bloomberg terminal. So that's a massive 5% increase. Basically, retail is 50%. The toots have 50%. Originally, it was retail 60, institutionals 40%. And that kind of proves my thesis that the big boys have been buying because they do not want to be late or miss out on this story. So let's go through the numbers. Profitable, once again, $143 million of GAAP net income, which is amazing for Palantir. Rule of 40, again, this measures your operating income and your profitability along with your growth. That is at a 68% for Palantir. I mean, this is kind of unheard of in SaaS companies. We did see Alex Karp talk about this on the earnings, saying that like most companies, SaaS companies, can't get to this type of rule of 40. Now, you might be wondering, how is Palantir able to keep their margins so high along with accelerate top line growth to get to a 68% rule of 40? It's because they don't spend on sales and marketing, or they have minimal spend on sales and marketing. Most SaaS companies, one of their biggest spends is like customer acquisition, right? They have to pay for sales, they have to pay commissions, all this stuff. Palantir has those expenses, but those expenses are not nearly as high as some of their competitors. And as a result, they are able to have a high rule of 40. Now, why is this important for investors? Well, this means that their AIP bootcamp strategy is working, something we've been talking about for a year and a half now. Going to customers, giving them the product, saying, don't pay me, just use it. And if you like it, then we can have a conversation on sales, aka giving more than you take, has been the route to success. And as a result, Palantir has benefited from that tremendously, and it has helped their margins as well. So AIP bootcamp seems to be working well in terms of accelerating growth and also making sure they are continuing to be profitable and have strong operating margins. So U.S. revenue, their largest market, Karp talked about this on the earnings call as well, that the other countries, I mean, he flat out called out Europe and said, hey, these guys are going to get left behind. And I think it's more of a marketing thing from him because, he's not going to be able to convince European companies overnight to start embracing Palantir. But if he can start calling them out and maybe putting a little bit of pressure on them to realize they are not going to be competitive in the 21st century via AI if they don't embrace things like Palantir. It doesn't have to be Palantir, but you have to embrace digital transformation. If you don't do that, you're going to be left behind. And U.S. revenue growth at 44% compounded is a big deal. It means that the United States is going to be first in line on this AI revolution, and they're not holding back. And as a result, we're seeing that in Palantir's numbers. Commercial revenue, 54%. That was incredible. U.S. government revenue growth, 40%. Now, this number, I did an entire podcast yesterday with Adam. I'll put that in the description. We talked about Palantir actually winning a billion-dollar contract, not confirmed yet, but we found it on sam.gov around the Department of Navy giving Palantir a contract. It looks like more of those contracts are coming down the pipeline. So U.S. government revenue growth compounding at 40% is a big deal, dude. Like this number, for those that didn't follow the Q4 2023 earnings, was 6%. Like it was a really small number, bro. And like it just like the fact that it's compounding at these levels. I'm not saying it's going to compound continuously at these levels, but the fact that we're getting at 40% growth is what you need to see from a growth stock and from a stock that is being valued as highly as it is with Palantir. Palantir needed to put up the numbers this quarter to justify, at least begin to justify the way the market is perceiving their price action. And they're doing it even more than what the market thought in different sectors like government growth. And I think that's why you're seeing a lot of momentum as well continuing in the stock, even if people feel the stock is expensive. Well, they're growing. And sometimes with growth stocks, when they're growing, you might be willing to pay a premium. And it seems like that's what Palantir is doing right here. Commercial revenue growth, 27% year over year. Incredible government revenue growth overall, 33% year over year. Total revenue, 30% year over year. So this was the big number. Everyone wanted to see a number of 30% growth. And we were able to get that 30% growth, which means Palantir is now reaccelerating top-line revenue growth. So we also had adjusted operating income margins at 38%. That margin has gotten higher. It was 29% in Q3 2023. Now we're at 38%. That is not bad. It was at like 15 to 17% a couple quarters before Q3 2023. So that is more than doubled over the past year and a half. And it is very important because top-line growth, we want to get closer to 30, 40, 50%, get to those like NVIDIA level growth numbers. Maybe that happens one day. But if we can't get there, then we need these margins to be good as well. And adjusted operating income margins continuing to go up is important. And if they can keep going up, that just means we're going to have more profitability ultimately on the bottom line. Commercial customer count was up 77% year over year. Now, customer count was up 39% year over year. It did decline quarter over quarter. It went from 7% last quarter to 6% this quarter. I don't think that's that big of a deal. We now have 629 customers in total. And the reason it's not that big of a deal is because the money that we're getting from our customers, meaning the amount of capital that we're actually, the amount of revenue that we're generating per customer is going up. I think it's, I believe, at 2.83 million now. So even though we're adding less customers quarter over quarter, which again, I think is not going to be a trend. I think over the long term, we will continue accelerating growth quarter over quarter in customer count. The amount of money we're getting is more, which means it seems like AIP, logically, you could argue, is starting to be monetized, which is what everyone who is bullish on Palantir is waiting for. Like, when does AIP have massive monetization? I think that's starting, So they introduced AIP back in June of 2023, said, hey, we don't have a pricing strategy. We'll figure it out. And I think they're beginning to figure it out, which is why we're seeing this top-line revenue growth continue to do well. 104 deals closed over $1 million. That was important. Now they have $4.6 billion in cash, no debt. That $4.6 billion can still generate about a 5% or 4.5% yield from treasury bills. Again, rates are going to be coming down, so that money is likely going to continue to reduce in terms of their net interest income, which accounts for about 33% of their overall profitability this year. But adjusted operating income margins going up, and their ability to reinvest a lot of this $4.6 billion into growth initiatives over just treasury income, I think is what can accelerate top-line revenue growth, which can make up for the lack of net interest income that we will have next year as rates come down. So that to me is pretty incredible. 60% margin at $435 million on their adjusted free cash flow. And one of the other big things in terms of their guidance, if you can, it's really annoying. And one of the other big things in terms of their guidance is that Palantir believes they will have adjusted free cash flow in excess of $1 billion for 2024. $687 million, representing a growth rate of at least 50%. They're going to have revenue at $2.8 billion to $2.809, basically saying we're going to grow around 27% for the year. And for the fourth quarter of 2024, they expect around $767 to $771 million, with adjusted income from operations of about $302 million, around that 38 to 39% margin from their revenues. The free cash flow of $1 billion going into this year is very important, or to end out the year, because free cash flow is what a lot of analysts, quite frankly, care about. It's like, how much cash is the business actually generating, and is there potential to dramatically increase this number, which allows companies to have enough money to be able to buy back their shares, which is why all the hyperscalers have so much free cash flow, they can just use that money to buy back their shares. And will that money be able to be used to just accelerate growth for Palantir? I think the street is betting on that, given they're, agreeing to buy Palantir stock at these valuations and these levels. And that free cash flow guidance is ultimately, I think, what the street was excited about in conjunction with the top line revenue growth accelerating in Q3 earnings in 2024. All right, so what do these earnings actually mean for you if you're an investor? Let's discuss kind of what this means in terms of valuation, where Palantir sits at right now, and the long-term trajectory of this company. First of all, I'm just so happy that they accelerated growth, and I'm just so proud of the team, Karp, Sham, Ted, Ryan Taylor, David Glazer, all these guys, so many people in this Palantir ecosystem community, all the employees that work their ass off to get to these levels. It is not easy to reaccelerate growth. It is not easy with the world having all the pressure on your shoulders to be able to put up these numbers. And they did put up these numbers. And I think as shareholders, we have to be very appreciative of that. A lot of shareholders that started getting in 2022, 2023, Palantir is the real deal. It's the real deal. And I know a lot of people during those years, including myself at moments, were just like, is this the real deal, right? There was always this hunch that we all felt, which is why we've done 170 episodes every Friday night for Palantir Weekly 2 years in a row. It's because we all felt there was a real deal, even when the stock was at $8 and most of us were down. For many people, I was down like 50 grand. A lot of people were down hundreds of thousands of dollars, millions of dollars. It was all a journey of trying to figure out, was this real? And I think these earnings showed us that it was real. And as a result, it's just really incredible to kind of see this play out. I did tweet this picture the other day, last night. So let me just show you guys this picture. I went through some of my old videos and I took a look at when Palantir was $10 and the video that we made. And this is that picture right here. So, it was breaking $10 a year ago. Why Palantir broke $10, right? And so it's just been an incredible journey from the past couple of years. And I think all of us are realizing how special and important this company ultimately is. Now, in terms of the numbers themselves and what it represents for the company, I think it represents reaccelerating growth. I think AI is starting to be top of mind for most of the companies that exist on the planet and government organizations. Karp did say on the earnings call, we don't want 10,000 customers paying us XYZ a month. We want the best of the best customers that will pay us a lot more than, a couple $100, couple $1,000, couple $1 million a month, because they believe in our vision. They believe that we're genuine partners with them. They want to work with us. From the government side, Karp talked about how Sham and Aki, all these people actually care about providing value to the government. That's why they're still here today. And from the commercial side, we see it with extensions with BP and all these other commercial clients like Tampa General Hospital. The reason they're extending their contracts for 5 to 7 years is because they believe in Palantir as a partner, not just Palantir as a solutions provider, not just Palantir as like the IT infrastructure of their organization, but a legitimate partner to help them grow as Palantir grows as well. And I think that's very valuable and that's very important. And it seems like that trajectory of growth led with AI and AIP is not going anywhere. So top level, Foundry seems like it can really become the operating system for the enterprise. We've been talking about this for years, but it seems like that has a very legitimate chance of happening if they can accelerate the growth. It seems like AIP on top of that is only going to get better and better and better as these models get better and better. Karp continues to say that the models are commodities and the infrastructure to actualize the potential of those models is where the real value is. I think he's correct about that, and I think that is only going to get more important to the market over the next decade as they realize what actually makes AI operational in the enterprise. And then finally, you have to ask yourself, where's the TAM? And I think the TAM is many analysts and many sort of banks and firms have come out and said AI in the enterprise is a multi-trillion-dollar TAM. Okay, if it's a multi-trillion-dollar TAM, then someone needs to unlock the value of that TAM. And that seemingly is going to be a few software players that benefit from all the large language models that are created by the hyperscalers. And you need meaningfully a software company to figure out how to integrate this large TAM with all the productivity and value that AI is promising will bring to the marketplace and really to humanity. And I think one of those companies is Palantir, if not the leading company is Palantir. And that is why we are seeing the momentum. And that's why I think as a long-term shareholder, it makes sense to continue, at least for me, holding the stock. Now, let's talk about valuation. So valuation is up there. I don't think anyone can realistically say that trading at 130 times price to free cash flow, or at this point, I think it's 40 times price to sales, 50 times price to sales, and a 295 PE isn't expensive. Now, again, PE is not my favorite metric because the company just turned profitable, and I think they can grow into all that. But price to sales and price to free cash flow just shows how expensive Palantir truly is at $58.86. Now, having said that, I think a lot of the sentiment around the community is I'm not buying here, but I'm not selling here. And what I mean by that is if you already have a Palantir position, and unless you just want more ownership of the company, a lot of people that I know that I talk to every day, they're not buying, right? And the reason they're not buying is because it's like, it's expensive, right? Like if you're buying at $10, $15, $20, even $30, paying $58 is a lot to be paying for something that you already have, a decent position in. But the same people are not really selling because it's not like it's $150, right? Like I know $58 is a lot and a lot of people didn't expect it, but $150 would be even crazier. So I think there's this sentiment overall in the community, and you can let me know what you guys think in the comments below. Is like a lot of people don't want to buy it, but a lot of people don't want to sell it. And that creates a conundrum here. Because if you got a ton of OG shareholders that are not selling, and you got the institutions that got in at 35, 37 on S&P inclusion, they're not selling either. They're like, shit, we got one of coolest companies in the world and it's already up after S&P inclusion, right? We're not going to sell. Then who's buying? And the only logical argument to that is new retail investors and new fund managers, institutional shareholders that are afraid of missing out. I think FOMO from retail and from fund managers is high right now. And I think it's high because they're looking at Palantir stock go up. Obviously, that's a big part of it. But they're also thinking, what if this is the thing? And what I mean by that is NVIDIA became the thing. It took some time, but it became the thing. And there were pullbacks and all these different things that happened, but it became NVIDIA, right? Tesla became Tesla. Amazon became Amazon. It had that thing about it that became something that was very special and ultimately became a very, very valuable company. And so Chris Camillo, I did a podcast with him a while ago. I think a lot of you guys saw that podcast. He's a momentum trader. He took 20,000, turned it into 60 million over the course of 20 years. And he started buying Palantir, I think in the mid-20s, and when Palantir was $35, we did our podcast. I'll put that in the description as well. And he said he doesn't give a shit about valuation. He cares about momentum and he cares about the trend. And for him, uniquely, boot camps was a trend that he thought Palantir was just the most unicorn of unicorn companies in the world to be able to sell software like that, given he has a history of selling software in his previous work experience. And he's, as an investor, he saw that and he thought this was just one of the most unique things ever that you have to be a part of. On top of his, thesis around what the ontology is and what it means ultimately for enterprises. So my point here is that the valuation's up there, and I would not be surprised. I think a lot of people wouldn't be surprised to see it come back down. But if Palantir has that thing that's a part of it, that thing that just makes it special, that thing that makes people think, why is OpenAI valued at 150 billion and Palantir's only at 130 billion, which is one of the theories I have, that maybe the market's giving Palantir 100, maybe the run for Palantir stops when it gets to 150 billion. Even though I know those numbers are crazy, but maybe it does because it's being comped against OpenAI, which might be the, biggest AI startup in the world. If Palantir is actually operational, profitable, they're growing in the context of AI in the enterprise, which you could argue is more valuable than AI for consumers, even though I think OpenAI has other ambitions as well, then you could make the argument that Palantir should be valued as much as OpenAI. I'm not saying that's the best form of valuation analysis. I'm just saying that is one form of analysis. The other thing is, again, FOMO. If you're a fund manager and you have no Palantir in the portfolio over the next 5 years, imagine you go into your clients at the end of 2024 and they're saying, all right, how much NVIDIA do we have? And you say none. And you're like, we don't have NVIDIA? Like what? Like there was a dip at 90, there was a dip at 100, there was a dip at 115. Like I know we didn't get it at 50, 60. Why didn't you get it at those levels, right? And so any dip on Palantir, I think, has a chance of getting bought aggressively because a lot of fund managers are just going to be like, well, we can't justify not having Palantir. And these fund managers, they care about their job more than they care about their returns. So to protect your job, if everyone's doing something, then you might just end up doing it as well. And then you can't get blamed if Palantir goes down because you're like, well, everyone was buying NVIDIA. Everyone was buying Palantir. So you can't blame me. You can't fire me. As a result, you get a lot of FOMO and a lot of capital compounding into the company from people that have missed the story or feel that the train is running away and they want to get on the train before it fully takes off. So I think that's the reason why Palantir is getting this momentum. Final thing here in terms of the stock price action is JD Vance. Trump did win the White House. I forgot to mention, Trump was an entire tailwind for the market. Obviously, Palantir got that tailwind as well. JD Vance is now in the White House. He's the vice president. Palantir is very connected with JD Vance in terms of Peter Thiel, right? Peter Thiel funded his Ohio Senate campaign. Peter Thiel is one of his good friends, let him manage a lot of money in the venture capital world. And JD Vance is someone, if you've listened to his interviews, he understands AI. He understands technology. He's open to these conversations. He's not like, he's not like Tim Waltz, which was Kamala Harris's VP when it comes to engaging with technology, calling Elon Musk a dipshit. Like JD Vance actually embraces what Elon Musk is doing and is interested in the new technological ideas of our time. So from that perspective, you got an administration that wants to cut government spending and get more efficient. You've got Palantir that's main goal is to save taxpayers money with the contracts that they're putting into the government because they're going to be more efficient and effective. That is the whole reason why Palantir software is procured so much from the government. It's just faster, better, more efficient. It saves more money at the end of the day. There is a world where the market's like, let's buy it up because JD Vance is going to be instrumental in getting Palantir more contracts. Will that happen? I don't know. Is that possible? Potentially. And I'll put a video in the description as well because we've documented all of this stuff on the channel around JD Vance's relationship with Palantir and Peter Thiel. That will be in the description so you guys can go deeper on that. But it does feel there is an argument from the market that if JD is in the White House and he has the ear of Trump and he has the ear of Teal and potentially Karp as they get to know each other, and he's connected with all the Palantir people, and they want to make the government more efficient. They want to give contracts to tech companies that can actually solve things. For example, why is the Bureau of Labor Statistics so bad at aggregating all the data for jobs, inflation, etc., and then having to revise it every month, which reduces legitimacy and credibility of these institutions to the American public if these numbers constantly get revised? I'm not saying Palantir would fix that overnight, but I'm saying if Palantir could be the operating system to aggregate all that data and then derive insights from that data, which is exactly the point of Foundry, then you could have a more hopefully efficient and effective reading on the statistics that govern the American economy, like unemployment, inflation, etc. And Palantir potentially could get, you could argue, $1 billion 5-10-year contract to be able to rebuild up from the bottom the way the government aggregates all this data. Like, that to me is very logical. I feel like that could happen, and I feel like it would be way more efficient than anything we have right now. The question is, do you have an administration that's friendly to that type of ecosystem? And it seems like the market is believing, to an extent, that the Trump administration will be, and that could be a tailwind for Palantir. So overall, Palantir eviscerated, in the words of Alex Karp, this quarter. Accelerated top-line revenue growth, accelerated commercial growth, government growth. It just seems like the market wants to be a part of this story, and that's why it's gaining momentum. I'm not buying here. I'm not selling here. Kind of just sitting back, allowing the market to do its thing. And overall, it seems like if Palantir can continue to accelerate growth the way they are, then this can be one of the most exciting stories over the next decade. And it's just been an honor and a privilege to cover it. And I'm very, very grateful for this opportunity. And I thank you all every day for coming back and continuing to engage in the coverage. So thank you, everybody. Congratulations. We've got a lot to analyze. I haven't been posting this week because it's just been a very busy week. But every day next week and over the coming weeks, I should be uploading a daily Palantir episode. Lots of other news, deals that I haven't analyzed. All of that will be coming on the channel every single day. Thank you, everybody. I'll see you on the next one.